This conversation forward with Shashi Bhusan, Senior Research Analyst at Prabhudas Lilladher. Shashi, thanks so much for taking our time speaking to us here on Bloomberg TV India. What's your broad expectation of the IT sector, earnings this time around? Are you going to make a large differentiation between, the frontliners and the mid caps, given the fact that mid caps have already sort of sounded off the warning bells? Shashi, if you can hear me, we're just wondering at Prabhudas Lilladher, what are your anticipation or expectation of the earnings season for technology?
Right, so we are expecting a really divergent growth even in Tier 1 and Tier 2 as well. TCS is expected to lead the growth chart with 3.6% quarter-on-quarter growth in USD term in quarter 1. Whereas Tech Mahindra is going to witness decline despite $18 million contribution coming from inorganic acquisitions they have made in the previous quarter. And in Tier 2, in the mid cap, there are a few companies that has already warned, KPIT, Persistent, both of them warned for a slight decline in revenue. Whereas for companies like, NIIT Tech or maybe Polaris, there could be marginal growth during the quarter, and so is for Mindtree in this quarter.
I want to talk about, go into the verticals that will see a trouble and who it impacts the most. Telecom, we've heard off and on from most of the companies, be it the TCS, Tech Mahindra warning as well, that telecom is going to be a tough vertical. Which are the companies most exposed, which are the, which have clients mostly in that vertical where maximum revenue is coming in from telecom?
Right. So yes, telecom is one vertical that has been troubled and has been troubled for quite some time now. And as they go in different capex cycle, comes out of that, moves to opex cycle, and Indian IT derives benefits or sometimes pitfalls as their cycle changes. Now, in case of Indian IT, Tech Mahindra is the most exposed. Around 50% of revenue comes from telecom vertical. However, the positioning of Tech Mahindra is a lot different. Despite having all the challenges over the last few years in telecom vertical for other companies, Tech Mahindra continue to gain wallet share and market share in telecom vertical. So our sense that, very client specific this quarter created trouble for Tech Mahindra. But otherwise, we expect a steady growth going forward for Tech Mahindra, even in telecom, maybe with 1 or 2 quarters lag from here where we are right now. Among the lowest contribution, TCS and Infosys both has got 7-8% revenue coming from. Infosys has got 7%, TCS slightly higher, coming from telecom vertical, so they are the least exposed. So the pecking order is, in terms of exposure, will be Tech Mahindra, followed by Wipro, followed by HCL Tech, TCS and Infosys in Tier 1.
Let's talk about HCL Tech, and I talk about that company in particular, Shashi, because it's one of the best performing stocks year to date globally. In fact, I was just checking the Bloomberg Industries. It's the 3rd best software stock in terms of stock performance on a YTD basis. The last quarter, if you look at the rupee-euro movement, rupees actually depreciated versus the euro in the period April to June. Do you think that augurs well for HCL Tech, a stock that's holding its head above the water, even as the Nifty cracks towards the 8350 mark?
Well, no doubt that in terms of growth, HCL Tech has done very well, both in top line and improving their margin. That's one company that has improved margin by 8-9% point over the last 2-3 years, and their growth has also been in the top quartile among all the Indian IT companies, and no surprise that it is one of the best performing stock across the world in the sector. Having said that, we feel that there are very high exposure to IMS. There are stretched margin levers, have very limited maneuverability for going forward, and hence we are little cautious on the stock. Having said that, in this quarter we expect 3.5% growth for HCL Tech with little improvement in the margin because they don't have any wage hike impacting their operating margin during this quarter.
Shashi, thank you so much for taking our time. Just as that, HCL